All right, welcome to this explainer. Today, we're going to completely demystify the US stock market and show you exactly how to build long-term wealth by 2026 and well beyond. If you've ever felt totally overwhelmed by the world of personal finance or just wondered how everyday people actually become millionaires, you are absolutely in the right place. So, is the S&P 500 actually still the undisputed king of wealth building? You hear so much noise out there right now. Buy crypto, pick this trendy tech stock, time the market perfectly. But when you strip away all that hype and look at decades of historical data, one specific investment strategy consistently rises to the top. Let's see exactly why this foundation works so well. Here is our roadmap for today. We're looking at 1. The beginner's wealth strategy, 2. Defining the S&P 500, 3. Index funds and ETFs, 4. The power of compound wealth, 5. Choosing between VOO, SPY, and IVV, and finally 6. Your financial freedom. Let's get right into it. Section 1. The beginner's wealth strategy, building long-term wealth in the USA. Now, active trading, that is basically the Hollywood version of Wall Street, right? Staring at 6 monitors, super high stress, constantly trying to guess which individual stock is going to pop tomorrow. But statistically, over 90% of active traders actually fail to beat the market long term. Then, on the flip side, we've got passive investing. This is all about low-cost, long-term, smart money habits. Passive investing works because you aren't trying to beat the market, you're just owning it. You get to participate in its overall growth over decades. It's calm, it's efficient, and frankly, it works. Moving to Section 2, defining the S&P 500, the core of the American stock market. Look, you absolutely do not want to bet your hard-earned retirement on just one single company. If you buy a single stock and that company goes under, your money is literally gone. That's where the S&P 500 comes in. It stands for Standard & Poor's 500, and it's basically a stock market index that tracks the performance of 500 of the absolute largest, most successful companies listed on U.S. stock exchanges. We're talking the massive tech giants, the huge healthcare providers, the major banks, and all those household consumer brands rolled into one single metric, 500. I really want that number to sink in because that is the sheer scale of your diversification here. When you invest based on the S&P 500, you've got 500 massive, globally dominant companies working relentlessly, day and night, to innovate, sell products, and ultimately drive your personal wealth creation. If one company drops the ball, you've got 499 others right there to pick up the slack. All right, Section 3, Index funds and ETFs. Simplifying your investment strategy. So, the S&P 500 is a list of 500 huge companies. But how do you actually buy all 500 of them at once? You're definitely not going to sit there and make 500 individual trades. Enter the index fund. It's exactly what it sounds like, a single financial vehicle that perfectly mirrors an entire index. And since your computer algorithm is just matching the S&P 500 list, you totally avoid those sky-high fees from active Wall Street managers. This keeps the compounding power right where it belongs, in your own pocket. And you'll usually buy this through what's called an ETF, or exchange-traded fund. This makes the whole process incredibly accessible. It's basically a basket of securities that tracks the index. But the key here is liquidity. It trades on a stock exchange exactly like a regular single stock. Meaning, you can just open up your brokerage app and buy your first slice of the entire American stock market with just one click. It really is that simple. Which brings us to Section 4, the power of compound wealth, growing your money into a future fortune. Let's be absolutely clear right up front. This explainer is not some get-rich-quick scheme. The stock market is not a casino. But if you want to be a future millionaire, this is the literal blueprint. By consistently buying an S&P 500 ETF and just letting it sit, you unlock compound wealth. Historically, the S&P 500 returns roughly 10% a year. So thanks to compounding, your money can actually double roughly every 7 years without you lifting a finger. Over a few decades, that snowballs into some serious retirement wealth. Actually, get this. Back in 2007, Warren Buffett made a famous $1 million bet that a basic, low-cost S&P 500 index fund would beat a portfolio of elite hedge funds over 10 years. And guess what? He won. Easily. When the arguably greatest financial mind of our time is telling everyday people to use this exact low-cost passive approach and literally leaves instructions for his own family's trust to do the same, yeah, we should probably pay attention. Section 5. VO, SPY, and IVV. Choosing your S&P 500 ETF. So when you open your investing app, what are you actually typing into that search bar? Well, here are three of the absolute heavyweights. We've got VOO from Vanguard, SPY from State Street, and IVV from BlackRock. And here's the secret. Their investment goal is exactly the same. They all track the S&P 500. For an everyday investor, the only real difference is just tiny variances in their ultra-low fees. Whether you go with VOO, SPY, or IVV, you are effectively buying the exact same beginner-friendly index managed by the biggest financial institutions in the world. Finally, Section 6, your financial freedom, the ultimate goal of investing. Because at the end of the day, an ETF or an index fund, it's just a tool. True financial literacy is about making that shift from being just a consumer to being an owner. Think about it. Every time you buy an iPhone or order something on Amazon, you are fueling companies that you can literally own a piece of through these funds. It's all about sticking to your financial planning, adopting that wealth mindset, and using the market's incredible power to build your net worth over time. That is the real path to long-term financial success. So I want to leave you with one final thought today. We've laid out the roadmap, right? We've seen how passive investing works, how the S&P 500 diversifies your risk, and even give you the exact ticker symbols to look up. The knowledge is entirely in your hands now. History proves that the market builds wealth. So the real question is, what step are you going to take today for your own retirement wealth?